President Trump's higher tariff rates on trading partners have kicked in this Thursday. After weeks of suspense, US Customs started collecting President Trump's higher duties at 1 minute past midnight, although goods in transit now can enter the US at a lower rate until October 5th. The new rates are as high as 50% on Brazilian goods, 39% on Swiss exports and 35% on exports from Canada. The EU has secured a 15% rate, although that's been widely criticised as a capitulation. Carsten Brzeski is Global Head of Macro at ING Research. Carsten, do you agree this is a bad deal for Europe?
Well, I think it was the best of many bad deals, in all honesty, because when we were expecting a hurricane to come, it could have been much worse, and now it became a storm, which means a storm can still do damage. 15% tariffs will do damage, but clearly it could have been much worse.
Does the promise of a $600 billion EU investment in the US represent a real concession?
Well, that is the big question, Elena, because I think especially this commitment, the promise to invest 600 billion euro, but also the promise to buy and to purchase energy for 750 billion euro is clearly something that is only a promise. It is not being put on paper, because we also know that the European Commission is not in a position to actually implement these investments. It is up to national governments and in the end to corporates to decide on whether or not they want to invest more in the US. So to me, this is clearly the weakest part of this deal, of this agreement, because it could still mean that the US administration will change its mind once it realizes that they won't get the big investments that the European Commission seems to have promised.
Which economy will suffer most from this deal, the US or the EU?
Well, I think in all honesty, we will see different types of suffering. In the US, we will clearly see more inflation coming. In Europe, we will see more downside risks to growth. So, and we knew this from the beginning, that there are no winners in trade wars. There are only losers. Only some lose more than the others, or they lose differently. And when we look at the current story, we will see that in the end, it will be U.S. Consumers who will have to take up the bill. Not only on European goods, but also on Swiss, Brazilian, all these highly tariffed goods will in the end be paid by US customers. For Europe, it clearly means, almost 3-4% of our economic activity is depending on trade with the US. So there will be some harm. We've estimated that the 15% tariffs will probably lower Eurozone GDP growth by 0.2 percentage points. So yes, we will feel it, but it's not the end of the world.
Do you expect international supply chains to be reshaped to avoid the US market as companies look to sell their products elsewhere?
Now, that is when you ask the models, that is what the models will tell you. And the models will also show you that the adverse impact from tariffs on economic activity will grow over time, because indeed over time we will see companies trying to redirect supply chains, trying to change it. Well, the big problem here is we're talking about the United States of America. This is a huge single market. This is an extremely important trading destination for many other not only European, but for other countries. So it won't be that easy to simply reroute trade to other countries, because other countries do not have the same size, do not have the same purchasing power as the United States of America. That is one thing. And then it will depend on corporates to decide on whether they're gonna take the loss in terms of maybe losing market shares, in terms of making less profits via their sales in the US, or whether they really want to change supply chains. But changing supply chains, we know this since the start of the pandemic, really structurally changing supply chains takes a while and is very costly, and also means that companies will not jump on these decisions, but they will wait and it will gradually unfold.
We've yet to really see a tariff impact in US economic data, and some goods can arrive tariff-free until October. But what size of impact are you expecting in the US in the third and even the fourth quarter?
Now, that is the whole point. I think only the fact that we haven't seen so much of a negative impact so far doesn't mean that tariffs won't have a negative impact on economic activity and will push up inflation. It only takes a while. And as you rightly said, there is now another period until early October before we will see then the full impact of the tariffs so far. So what I would expect is that gradually on, we will see more inflationary pressures unfolding in the U.S. Economy. And at the same time, we will see that the start of the cooling of the U.S. economy that had already started now a couple of months ago will also continue because it's also U.S. companies that are depending on imports and input coming from other countries. So they will also see their costs increasing. There might be actually supply chain disruptions temporarily. So I would really see now a U.S. economy that is facing a kind of stagnation stagflation in the second half of this year, which will increase the pressure on the Fed to cut interest rates earlier than they thought they could do.
That was Carsten Brzeski of ING. Don't forget, you can watch more videos on Reuters.com.